Welcome to Geojit Spotlight. The countdown is on. With the union budget just around the corner, the air is thick with anticipation. Investors are eager to understand the government's roadmap for the coming year. To navigate the crucial event, we have with us today Dr.V.K Vijayakumar, Chief Investment Strategist, Geojit Financial Services. Welcome, sir.
Thank you, Abhilash.
So last 10 budgets were budgets of single-party majority governments. This budget is different. It is the budget of a coalition government. Will this change in political environment affect the budget?
At the outset, let me make one point very clear. We are discussing the budget to be presented by the Finance Minister on 23rd based on our present expectations and some concerns if we talk from the perspective of the capital market. Now, expectations and reality can be different, right? This is very much different from our discussion or analysis of the economy or the market. This is based on expectations. So reality and expectations can be different. So I'm making that disclaimer first. Now, coming to the answer to your question about the changes in the political environment and its likely impact on the elections. Yes, you are right. The last 10 budgets have been budgets presented by single-party majority government. This budget is presented by the Finance Minister of a coalition government. And in a coalition government, you have to accommodate the interests of the coalition partners. Therefore, the Finance Minister and the ruling party, BJP, the largest party, do not have the flexibility which they had earlier. So that, therefore, there will be some limitations. But that doesn't mean that there won't be any continuity at all. Actually, before the elections, the Prime Minister made a statement that the next budget, the full budget for 24-25 will be transformational. He made that statement on the assumption that the BJP will be getting majority on its own. The reality is different. Therefore, it would be unrealistic to expect a completely transformational budget, a big bang reform budget. But the policy continuity will be there because if you look at the key portfolios, the ministers in these portfolios, BJP retaining the speakership of the Lok Sabha, all this indicate continuity. So continuity will certainly be there in economic policy also.
So what are your broad expectations from the budget? Will it be the growth-oriented or fiscally prudent or both?
Normally, a growth-oriented budget will not be fiscally very conservative because in order to boost growth, you will have to make some concessions on fiscal deficit. If you focus on fiscal consolidation, fiscal discipline, then your growth expectations will have to be watered down. So these are apparently conflicting objectives. But this time the reality is different. So I would muster the confidence and say that this budget is likely to be both growth-oriented as well as fiscally prudent. The reason why I say this is, number one, we need growth. We need to sustain 7% growth. Unless we do that, we cannot address the major economic challenges that we are facing now. So there will not be any compromise on that. So it will be growth-oriented. But at the same time, the government can afford to be fiscally prudent also. Government will not deviate from the fiscal consolidation path because the revenue side is very bright. Last year, we had 8.2% GDP growth, much better than expected. The tax revenue has increased by 17.7%, great tax revenue. And more importantly, the government got a 2.1 lakh crores as the dividend transfer from the Reserve Bank of India. This is 1 lakh more than what the government expected. Therefore, the government is sitting pretty as far as the revenue is concerned. The government is unlikely. The present finance minister particularly is very much fastidious about fiscal consolidation. Therefore, the target for this year, the fiscal deficit target, as per the interim budget, is 5.1%. She can retain it at 5.1%. I see the possibility of the finance minister even reducing the fiscal deficit target below 5.1% this year and retaining the 4.5% fiscal deficit target for 24-25. So yes, the answer to your question is this budget will be at the same time growth oriented and fiscally prudent.
So there are widespread expectations on personal income tax relief. What are your views?
Well, it is very legitimate to expect and even demand concessions on the personal income tax front. We have two income tax regimes now, personal income tax regimes. One is the old regime with exemption and second regime without exemptions. In my opinion, the government is likely to give some reliefs in the new income tax regime without exemptions. The exemption limit, this new regime was introduced in 2020, so 4 years now. So even if you factor in inflation, the exemption limit has to go up. So it is likely that the exemption limit, which is 4 lakh now, 3 lakhs now, the exemption limit, which is 3 lakhs now, is likely to be raised. To what extent it will be raised remains to be seen. Some associations have asked for this exemption limit to be raised to 5 lakhs. We don't know what the finance minister will allow. And there can also be some reduction in the tax rates, not at the higher level. At the 30% income tax level, you cannot expect, it will not happen also, reduction in income tax rates. But in other income tax rates, particularly for the lower slabs, some reduction in tweaking of rates are possible. Perhaps the government might even do a sharp increase in the standard deduction. In this new income tax regime, one allowance is the standard deduction of 50,000 rupees. So it is quite possible that the government may increase the standard deduction from 50,000 to 1 lakh. That will be a very good relief. Certainly you can expect relief under income tax, and that will be a boost to consumption and economic growth also. That is the macroeconomic significance of that.
So from the capital market perspective, particularly from investors' perspective, what are the major expectations? There are rumors that the capital gain tax may be tweaked. Will this happen?
Well, there are expectations and concerns. I will address it in two dimensions. One, there are many rumors regarding the capital gains tax being tweaked and all that. Well, the investors in the capital market now, stock market investors, will be happy with the status quo. People are not looking for any concessions because the market is doing well, the returns are excellent, so it is not the right time to ask for concessions. So government, the stock market investors, the market participants will be happy with maintaining the status quo as far as the capital gains tax is concerned. But there is a concern expressed by some experts that it is likely that the government may increase the capital gains tax, which is 10% now. 1 lakh capital, long-term capital gains exempt from tax, and beyond 1 lakh, 10% tax. There are rumors that this may be increased from 10% to 15% or 20%. And there are some other rumors that the government might increase the tenure to qualify as long-term capital gains tax, which is 1 year now to 2 years, right? If that happens, if this rate is increased or the tenure is increased, that will be a negative from the stock market perspective. That will be a negative. Let us hope it will not happen. But I see another taxation, new taxation proposal or tweaking of the tax from the capital market perspective. And that is, F&O trade is an area of concern for the government, for the regulator SEBI. The SEBI has been warning about the F&O trade's excessive futures and options trade by retail investors in India, 90% of whom are losing money. 90% of the total F&O transactions in the world are happening in India. This is very unhealthy. I am of the view that it is very unhealthy and it has to be curbed. 90% of retail traders are losing money, and unless the government does that, people will continue to gamble and speculate. Therefore, it is quite possible that the income from F&O may be taxed at high levels. Presently, it is treated as business income with some concessions also. So that is likely to be changed and treated as a speculation income. It is also being speculated now that business income may be treated as a lottery income and taxed at 30%, irrespective of your income tax slab. 30% tax on the income that you make. And there are proposals that this should be tax deduction at source. So TDS also is likely to happen. This is a likelihood, a very strong probability. I won't be surprised if it comes. I'm of the view that it should come. But this will not, if it comes, it will not impact the market sentiments. Not at all. It will not impact the market sentiments. It can impact certain stocks, like, for example, the stock exchange itself. Bombay Stock Exchange income will decline. Therefore, the share price may decline. We are not sure. So there are certain segments which may be impacted by that. So this is one possibility.
Sir, any other budget proposal that can impact the market?
Yes, this is a very interesting and relevant question. There are some budget proposals which can anticipate now, which can impact the market. I'm not talking about a negative impact on the market, but it can have a negative influence for certain segments. For example, this is the right time for the government to aggressively do some disinvestment. A lot of money can be raised by disinvesting the stocks of PSUs. Public sector undertakings in different segments, banks, defense, railways, and defense related segments, the valuations have run up, valuations are very high, and government owns a large percentage of these stocks. In some companies, government ownership runs up to 92%. So in these segments, if the government declares a major disinvestment with intention of raising big amount of money and utilizing that money for many welfare programs which the government may be declaring in this budget, that is a very likely event. So if big disinvestment is declared, and the consequence will be that there will be an increase in the supply of stocks. Many of these stocks in these segments which I refer to are ruling very high because their floating stock is very low, and the operators have succeeded in jacking up the prices, and that's why the valuations are unjustifiable at a PE of 70, 80, 90. We can say that the prospects of these segments are good, excellent, no doubt about that. But ultimately, valuations have to be justifiable. That is not the case. Therefore, the government comes with a disinvestment, a big disinvestments in this time of high valuations that will increase the supply of stocks in these segments and bring down the prices of these segments. So these are the segments to watch. And this disinvestment declaration is a declaration to watch.
So inflation is a concern. Any likelihood of budget proposal to control inflation?
Inflation is a concern, but there are limitations on what the budget can do. Inflation has to be addressed through two approaches. One, through the monetary policy, which is the domain of the RBI and the Monetary Policy Committee. Second, through tax cuts, which was formerly done through the budget, but now tax cuts on commodities and services can be done only through the GST Council. The central finance minister or the state finance ministers cannot do that. So the government is likely to leave inflation management to the RBI, the MPC, and the GST Council. Partly, to a very marginal extent, the government can address the problem by reducing the customs duty and bringing the prices of certain commodities. But that will have only a marginal impact. And the government's focus has not been reducing customs duty to take the last several budgets.
So, what are the likely focus areas of the budget? Infrastructure, housing, agriculture, or new welfare measures?
Well, the focus areas of this budget will continue to be what it was in the previous budgets, what was highlighted in the interim budget, the capex expenditure. Capital expenditure in the interim budget was 11.1 lakh crores. The government will continue with that. Perhaps they may even raise it a little bit. There will be massive investment in infrastructure, in airports, seaports, roads, and the infrastructure development. There will be allocation for that. So the focus on infrastructure will certainly continue. But I think the government will surprise by declaring new welfare programs. The old welfare programs will certainly be continued with additional locations. For example, the Pradhan Mantri Awas Yojana. The first decision which this cabinet took and the Prime Minister signed was the decision to build 3 crore new houses under the Prime Minister Awas Yojana, Pradhan Mantri Awas Yojana. So the focus on affordable housing will be there. It is good from the employment generation perspective also, because house construction is a labor intensive activity. Then there are other flagship programs of the government like Ayushman Bharat is there. The Har Ghar Jal program is there, providing water through the piped water scheme. And I think the government will surprise this time with some additional new welfare programs, because the government has this additional revenue. 60,000 crores, there are rumors that at least 50,000 to 60,000 crores of the additional 1 lakh which the government got from the RBI may be spent on welfare programs for the poor, so that the Aam Admi, the ordinary poor people, can be given some welfare programs. So we do not know what these programs will be. So there will be a big focus on these welfare programs, particularly for the backward and marginalized sections of the society. And that is likely to be the surprise of the budget.
Thank you, sir. Thank you very much.